Greetings, grade 12 learners. My name is Mr. Simbi, and welcome to today's accounting lesson. This lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center. It is again that time of the day when we get to meet and do interesting calculations as we are preparing for the June exam that is already just around the corner. In the previous week, we have covered inventory valuation. So we have been doing our inventory valuation. In the previous week, we did the first in, first out. That is your FIFO or your FIFO, depending on how you want to call it. And then today, I'm going to cover two more methods of calculating our closing stock. So make sure that you have somewhere to write, and then you have a pen, paper. You also need a calculator for today's class. And in today's class, there is a worksheet that has already been distributed. So you can inquire with your teacher if you have that worksheet. If you don't have, you can simply send them a message and I'm sure they'll be ready to assist you. Okay, so without further ado, let's get in today's work. All right, here are my objectives for today's class. As I said, I'm going to be looking at inventory valuation methods, and I'm going to do specific inventory calculations, and I'll also touch on internal control. Remember, inventory is asset, so it is very important that we have internal control measures in place to safeguard our assets. As I said earlier on, in the previous week, I did the first in, first out, which was the first inventory valuation method, which I did. And remember, in the previous week, I told you this was one of the three methods that we have. So this was the first one of the three methods that we have. And then today I'm going to be doing the weighted average method, as well as the specific identification. All right. So if you want to know what are these methods, how do they work? How do I calculate? But most importantly, how do I comment on what I have calculated? You should be able to analyze the information as well as comment on that information. So in today's class, we're going to do calculations as well as commenting. Let's begin. What is the weighted average method? What is this method? The weighted average method is a method that is used to calculate the value of closing stock, just like your first in, first out, your FIFO. There are methods used to calculate the value of closing stock. But with the weighted average method, the way it calculates the value of closing stock is very interesting, and I'm going to show you that today. But this method is used when stock of low value is bought and in huge quantities. So you have stock in huge quantities, and therefore you calculate an average price for it, and then I'm going to show you how to get that average price. It is used on products that are difficult to trace the cost price of each item, so we can then be able to calculate the average price. The average price gives a good composite picture of the cost of the goods. All right. And at the end of the year, the average price will be used to calculate the value of closing stock. So in today's class, I am going to calculate the average price, and I'll show you how that average price can then be used to calculate the value of closing stock. So if you want to know how to calculate the value of closing stock using the weighted average, make sure you stay tuned. Don't go anywhere. In actual fact, you need to tell your friends that accounting has started. So make sure you send a WhatsApp message to your friends. Tell them class is on. They need to have their pens, their pencils, and paper ready, because in today's class, I'm going to show you a few tricks on how to calculate the value of closing stock. All right. And then this is for retailers who sell even cutlery. Like in today's class, I'm going to be showing you for a retailer who sells pots and pens, as you see here. All right, so I just took this idea from one of the questions that we have in today's activities. All right, All right. With every method, the formula is very, very important. Formula. So you need to know this formula from your head. Okay. So at times we say it must be in the fingertips. That the moment you start writing, you should be able to just flow. Are you still with me? All right. So you need to know the formula. You need to know the formula. And this is the formula for the weighted average method. The formula is rands over units. All right. So we're going to divide our rand values with our number of units such that we can get average price. Okay. In the previous week, I don't know if you still remember, I was able to calculate cost of sales. If you remember that, cost of sales. And who remembers how we calculated cost of sales? Okay, what did we say? We said opening stock, then we added purchases, then we subtracted returns back to suppliers, and then we added carriage. At times the question can bring customs duty, so you need to add that one as well. All right. But you also need to remember that if there are donations or drawings, therefore we also come and we subtract them over here if there are any donations and drawings. And then we divide all of this by the opening stock. So this is now in units, the number in units. We divide this by the opening stock in units. Then we add purchases. Then we subtract our returns. It will give us the cost per unit, per item. Then we now say that unit cost, the cost per item, the average price per unit. Then we multiply it by the number of units on hand now. So we will be given the units on hand. Then we multiply that with the average price. I'm going to show you how to get the average price and how to multiply that even with the units on hand. And then it will give us what we call the value of closing stock. So in today's class, we should be able to calculate the value of closing stock. Okay, so I'm so excited about today's class because I'm going to show you two methods. Yes, in today's class, I'm going to show you two methods. That is your weighted average as well as your specific identification method. So I'm going to show you two methods, and I hope you're going to enjoy today's class. But in order for you to do that, make sure you are writing, you are following when I do calculations. Make sure you do the same with me. All right, activity number one. All right, we are not going to waste time here. All right, the June exam is around the corner, so we need to hit some figures. We need to have those calculators ready, and then we need to punch in some figures. If you're ready, let's start with activity number one. This is an extract, okay? So we only took in some parts from the Eastern Cape Prelim paper for the year 2023. And our focus is on question number 3. If you guys are ready, then let's go. The information relates to Lion Stores. The business is owned by Lion, sells one type of leather purse. The business uses the weighted average method. Very important. And the periodic stock system to value stock. Required. Refer to information A. Calculate the following for the financial year ended 20th February 2023. The value of closing stock. Using which method? The weighted average method. So you have to know which method the examiner wants you to use. All right. So once you know the method, it becomes very easy for you to do your calculations. All right. So let's begin. This is the information on the leather purses. This is the information on the leather purses. It is very important that you read the information, understand it, so that when you are answering, you know you are well informed of what is expected of you. Okay. So let's begin now. To do that, remember, the demands of the question are very important. Here is the demand. Calculate the value of closing stock. If you remember what we did earlier on, we had a formula. You remember the formula? What was the formula saying? Remember, there was a line. Okay, so I'm going to give you the line, then we're going to write on the line together. What did I have? I had my rands at the top. Others call it the value. Rands or the value. And then I was dividing this by what? By the units. So it is rands over units. Okay, let's say it again. It is rands over units, or value over units. You good? All right, let's go. So we will now say, what was the opening stock? So in my mind, I'm thinking cost of sales. In my mind, I'm thinking calculation of cost of sales. Let's begin. Opening stock. Can you see that one there? So how do I know it's opening stock? It is on the 1st of March for the year 2022. So I'm going to come here now. I'm going to say 71,040. Okay, so I want to see you writing together with me so that this makes more sense. Okay, so I took my opening stock. This is in rands, in value. But I know I also have units for this. Do we have it? Yes. How much is that? 480 units. So I'll come to the bottom, then I'll say 480. Can I go on? Then I'll say plus. Plus what? Plus my purchases. Plus my purchases. So I'll come here. I have my total purchases. My total purchases is 362,500. So plus 362,500. How many units were they? 2,000. So I'll come here and say plus 2,000 units. Are we still okay? All right. Then I'll now go on again, and then I'll say carriage. Here is the information on carriage. Total carriage of 20,960. So this is the total carriage. Was paid for purchases during the year. Lion stores were not reimbursed for carriage on the returns. So that means when I subtract my returns, I'm not going to consider the carriage. I'm going to show you how we do that. So here I'm going to come and add my carriage. I'm going to come and say plus. How much is that carriage, guys? 20,960. 20,960. Are we still okay? Okay, cool. Then I'll come and say minus returns. Here are my returns. I'll come and say minus over here. In January, we returned 30 units. The cost price per unit was 205. So it gives me 6,150. That's the total of the returns. And we're told that we were not reimbursed for the carriage. So the amount of money that we paid, that is in the 20,960, we're not going to get it back. So we're not going to subtract it because we were not reimbursed. We're not given back that money. No refund on the carriage. So that means I'm going to leave it there. I'm just going to come and subtract the cost only of the units returned. Only the cost of the units returned. The total is how much? 6,150. So I'll come here, then I'll say minus 6,150. How many units were they? Do you still remember? These were 30 units. So I'll come here and say minus 30. Like that. Okay? So I want to encourage you. Don't end up punching everything into the calculator. So you're going to do it step by step. In your calculator, you are now going to say 71,040 plus, okay, I'm going to repeat the figure again. 71,040 plus 362,500 plus 20,960 minus 6,150. How much do you get on your calculator? Thank you. You see, you get 448,350. Beautiful. Then we divide this now by the units, which is 480 units plus 2,000 units minus the 30 units. How much is that going to give you? 2,000, say it again, 450. 2,450. 50. Then we divide this now. It will give us what is known as the average price per unit. So we have calculated the average price per unit. How much is that average price per unit? Say 183. So on average, each unit is costing 183. We now want to know, what is the value that we get if we have 360 units? What is the value if we have 360 units? That means I'm going to come here now and I'll say, I have 360 units. Each one is costing 183. What is my total cost, therefore? It gives me 65,880. This therefore becomes the value of closing stock. So we've calculated the value of closing stock using the weighted average method. This is it. This is the value of closing stock. All right. Yes, you're thinking, this is simple, Mr. Simple. Yes, indeed, it is. The only thing you need to do is constantly practice. Okay? What you've learned here today, you should go and do it over and over. Get a past exam paper. Do it, and then you can go to your teacher and say, please, can you help me and see if I got this right? Practice is of great importance. Can I move on to the next question? Let's go. The next one then says, calculate the cost of sales. Calculate the cost of sales. Okay. So what I want to do it the long way first, the long way. And then I show you the shorter way so that you understand why it has to be the shorter way. If you remember, we are told that this business uses the periodic inventory system. Thank you. The periodic inventory system. So if they use the periodic inventory system, we know the method already. How is that method working? What do I start with? Opening stock. Okay. So you give me the method and I'll be writing. So, and then we write together. So that method would say opening stock. And that opening stock is 71,040. Then I'll say plus purchases. In my purchases, I'm going to take my purchases, which is 362,500. Then I'm going to subtract my returns. Remember the returns. Then I'm going to say minus 6,150. And then calculators, guys, calculators. How much do I get here? 356,650. Okay. Then what do I come and add? I'll add my carriage. Then I'll say plus carriage. When I add my carriage, which is 20,960, and then I add these three figures here, I will get 448,350. This figure should ring a bell in your mind. Where did we see this figure before? Oh, we saw it somewhere. Where was it? Here. This is where we saw it. You remember this now? We saw it when we're calculating the value of closing stock. So it simply means we took a longer route. We could have just taken this figure because we had it initially. Okay, so it means when I come here now, when I have my 448,350, the only thing that is left is to come and say minus closing stock. And my closing stock, in this case, remember, we calculated it. How much was that? 65,880. Get the difference between these two, then that will give you your cost of sales. Say it again. 382,470. Okay. But I told you, this was a long way. This was a long way. The shorter way was to say, if the examiner asked me to calculate the value of closing stock using the weighted average, I will certainly have to calculate this amount along the way. I think you remember from grade 11, we used to call it the cost of goods available for sale. So I'm going to calculate this along the way in any case. So it means you're going to go back to your calculation. You take this 448,350. Then you just say minus. Minus what? The closing stock, which is your 65,880. And then it gives you 382,470. As simple as that. So you don't have to do this entire long calculation, especially if you're using the weighted average method to calculate the value of closing stock. Why? Because you would have calculated along the way. Along the way, you'd have done that. So I wanted to show you the longer way so that you understand why we're shortening it. Okay, can I move on? Let's certainly do that. Let's do that. Let's do that. Okay, so after calculating cost of sales, now we can calculate gross profit. That should be easy now. Okay, that should be easy. How do we get gross profit? We say sales. Do we have sales? We are told that we have sold 2,050 units here. We sold 2,050 units. And our price per unit was 295. Price per unit is 295. That should give me total sales. I need to see those calculators. How much is it? 604,750. 604,750 minus my cost of sales. Do I have this? Yes, we just calculated it. Do you remember how much it was? Say it again. 382. It was 382,470. Thank you. And this would then give us what we call our gross profit, which is 222,280. 222,280. That is your gross profit. And let's take it a bit further now. Once you have your gross profit, you should be able to calculate your markup percentage. Okay? Your markup percentage. How do you calculate markup? Very easy. Do you remember? Okay. What is the formula to calculate markup? You would say it is your gross profit over your cost of sales. Multiply this by 100/1. Okay? Your gross profit. And then remember we had the gross profit. How much was that? That was your 222,280. And then we divide that by the cost of sales. We got that, remember, which is our 382,470. And then you multiply everything by 100/1. And we get 58.1%. If you look at the demands of this paper, it did not want all of this. But it's us, of course. When we get an opportunity to practice, we can always drag it a bit further. So we pushed a bit the limits of this particular question paper so that we can enjoy a bit of calculations. So we're able to calculate cost of sales. From cost of sales, we calculated gross profit. From gross profit, we calculated the markup percentage. All right. So these are calculations that you should familiarize yourself with. There is one question that examiners love so much when it comes to inventory valuation, okay? Because remember, we're going to be talking about internal controls. So at times, they give you a problem that must be solved, okay? As in this case, we are told to calculate the number of missing units. It could be that units have been stolen. So we need to know how many units have been stolen, missing units. There is several ways of doing this. Too many ways of doing this, okay? I'm going to start first with the tier count. I'm going to start with the tier count, and then we're going to see if it's going to work for us, okay? With the tier count. So with the tier count, I'm just going to draw, here are my two lines here. And I'm going to open a stock account, but remember, this is in units. A stock account in units. So it means it increases on the debit side. So I'm going to start off, I'm going to say my opening stock. All right. So I'm just going to call it OS. That's my opening stock. How many units did I have at the beginning? 480. Okay, so if at the beginning I had 480, and then how many units did we buy? So I'm going to come and say purchases. But on my purchases, I'm just going to subtract returns as well. So I'm going to say 2000 minus 30. Minus 30 over here. Therefore, I'm going to have 1970. Okay, you could have put the returns on the credit, still one and the same thing. You're subtracting the returns. Okay, and then the units sold. How many units were sold? Your 2050. These are the units that were sold. And then you're going to have now your closing stock. That is the CS, closing stock. How many units is my closing stock? There we go. 360. Okay, so this is what I then have. Then I'm now going to say 480 plus 1970. You guys have calculators. Let me see how much you're getting. 2450. Then I'm coming here, 2450. Then I'll say 2450 minus 2050 minus 360. How much do you see on your calculator? 40. Then that 40 is what we call missing. All right. Someone is asking, why whispering, Mr. Simbi? It's because this is very important. You should be able to calculate missing units. This is one way. Can I show you the second way? Okay, here's the second way. The second way is simply to say opening stock 480 plus my purchases 2000 minus my returns 30 minus the units sold 2050. Don't forget to subtract the closing stock 360, and then we'll get 40 units that are missing. Two ways that I've shown you to get the number of units missing. One thing that you should then prepare for are internal control measures. In the event that stock is missing, what can you do to avoid that happening in the future? Because remember, inventory is an asset, and a business must have internal control measures in place to safeguard its assets. All right? We're going to move to the next activity now. All right? Because remember, I promised you a number of activities today. So I'm going to move on to the next activity. Can I see by showing of hands that we can move on? All right, thank you. So we're going to move on to the next activity, which is activity number 2. Okay, let's do that. Here is activity number 2. And this one, we pulled it out from the Free State Prelim paper for the year 2023. And our focus is on question number 2. Okay, so there are other aspects of the paper that we ignored, but we only wanted to address aspects that have to do with the weighted average method. Okay, let's see if we can get something out of this. Right, are you ready? Let's go. The question reads, Eden Pots and Pebbles. Eden Pots is a local business that sells garden pots, which is situated in Clarence, a fast-growing tourist attraction town situated in the heart of the Free State. This small business is owned by Eden. The financial year ends on the 31st of May each year. Okay, so here we're being told about the year end. Okay, to promote sales, Eden attends many market exhibitions to broaden the client base. Garden pots, weighted average method. So as I said, this question was testing on the garden pots as well as I think the other product was the pebbles. Okay, so we're not going to look at the pebbles. We're only going to focus on the garden pots. And then the demands of the question. I think here we have about 3 questions that we want to address. 3. Okay, the first one, to calculate the value of closing stock using the weighted average method, and then to calculate the rand value of the garden pots lost. Remember what they did in the previous paper that we did, the Eastern Cape? They wanted to know the number of units missing, but here there is some pots that got lost, and they want us to do some interesting calculations. So make sure you don't go anywhere. You need to stay here so that I can explain this particular question. And then the last one is to advise Eden on preventing future losses. You remember what I said? Okay, so please stay put. Let's go. The first part of this question wants us to calculate the value of closing stock using the what? Weighted average method. All right, are you ready? I know you guys are always ready. I'm just asking. Okay, can we go? Let's go then. What do I start with? Rands at the top and units at the bottom. Value at the top, units at the bottom. Let's go. What is my first thing? Opening stock. Okay, 13.5. So I'm coming here to say 13.5. That is my opening stock. I need the units now. How many are they? 60 over here. 60. Can I go? Thank you. Then I'll come and say plus. You already know what we're going to add. What are we going to add? We're going to add our purchases. There it is. 53,750. So I'm coming here to say plus 53,750. What is that? Purchases. I add the purchases in rands. At the bottom, I also come. What do I add at the bottom? The units. How many are those? 260. Can I go on? Thank you. All right. Where do I go now? Oh, I see returns here. And they say 5 pots. Once I hear 5, I come in, I record it already. 5 pots were returned. I subtract because they've been returned back to the supplier. Do we still have them here? No. So we subtract those 5 that were returned. But I need the value of those 5 that were returned. I know there were 5, but here I'm told they were from the month of November. So they want to give me the cost per unit. So I have to look for November. Here's November. What was the cost per unit? 195. So I'm coming here to say 15 units multiplied by 195. Can I go? All right. So how much is that going to give me? 5 times 195. That gives me 975. So I have my returns in value as well as in units. Is there anything missing, guys? I want you to look at the question again. Is there anything that I should record? Certainly, yes. I should record my carriage on purchases. How much is that? 2,395. Do I add or I subtract? I add. Plus 2,395. What did I teach you in the first question? All right. So you're going to do it properly. You're going to add the rand amounts first. Let's do that. 13.5. So I call out the figures for you and then you punch in your calculator so that we can move together. Is that okay? Let's do that. 13.5 plus 53,750 minus 975 plus 2,395. How much do we get? 68,670. 68,670. Then I divide it again by 60 plus 260 minus 5. That's going to give me 315. I divide these now. How much do they give me? It gives me how much? 218. What was the question saying? Calculate the weighted average cost per garden pot. That is what the question was saying. Calculate the weighted average cost per garden pot. All right. So in this question, they did not want the value of closing stock. They wanted the weighted average cost per single pot. And the answer is 218. Yes. So this question is complete. All right. Complete as it is. All right. Oh, some are saying, why can't we just calculate the value of closing stock as well? We can do that, but this is what they wanted. Okay, but since you have asked if I can calculate for you the value of closing stock, so if I'm going to calculate for you the value of closing stock, I'm now going to say, all right, those who joined my class right from the beginning, what did I say? I'll take the value which is 218. What do I multiply with? The units at the end. How many units do I have at the end? 42. Then I come here, then I say, multiply that 42. How much is the value now? I get 9,156. If they wanted the value of closing stock, that would have been the answer. But in this question, they didn't want that. They wanted the average cost per unit. So reading the question and understanding it is of great importance. Don't assume. Never assume. Read the question, understand it, then you apply yourself according to the demands of the examiner. Don't assume. Read the question properly, understand it, then apply. Can I go on now? All right. Next question. Oh yes, let's go. Next question then reads, calculate the rand value of the garden pots at market exhibitions. Okay, the ones that got lost. You remember we spoke about that one. We want to know the units that got lost, and then we want to know their rand value. Okay, so what the examiner has done here is to change a bit from what we know. We know that we should calculate the value of closing stock, but in the previous question we only calculate the value cost per unit, and in here we are used to calculating the number of missing, but the examiner changed it now. He wants the value. Okay, but we still have to get the units first, so let's do that. How do we get the units? Okay, let's use the shorter method, okay, which is to say 60 opening stock, remember, 60, then I say what? Plus 260, which is my purchases. Where do I go to now? Where do I go? Certainly, I say minus my what? Minus my returns, which is 5. And then I also say minus what? My sales, 265. Minus 265. I must still subtract one more thing. What is it? I must subtract my closing stock, which is 42. Calculators, guys, calculators, how much do you get? 8. So it means 8 pots got lost. 8 pots got lost. All right. So if 8 pots got lost, what is their rand value? We know that the cost per pot is 218. The cost per pot is 218. So if we lost 8 pots and each pot is costing 218, what is the total value of the pots that got lost? That's what the examiner wanted now. Calculators, how much do you get? 1,744. Okay. Thank you, guys. Thank you. All right. Very important that you understand what the examiner wants from you. Can I move on from this one? Certainly. Let's go on to the next one. 2.2.3. Advise Eden on preventing future losses of missing or stolen garden pots whilst attending the market exhibitions. Provide 2 points. Okay, so as he attends the exhibitions, that's where the pots are getting lost. Okay, it's not like the pots are walking off. It means someone is coming to pick the pots up and take them away. They are not just wandering off on their own. Certainly someone is taking the pots from our shop. So we need to have internal control measures in that case that can prevent our pots being taken away from our exhibition stand. Okay, so let's see. What can we say? Number 1, put only 1 pot of each range on display and log the rest of the stock properly. This is very important, that we have to display only 1 and then we lock up the rest. Can I give you an example? Like, for example, if you go to a shop that sells cell phones, you're not going to find all cell phones in one big basket like you find your packet of noodles. the cell phones will be locked off somewhere and you only get one on display. So they're saying put only one port on display and lock up the rest. That is what we do. That's point number one. Point number two, do not display too much stock. Rather have customers order from the catalog or use samples. Okay, so we use a customer ordering system. So we only have samples and then the customers order, then we then provide the pots to them rather than displaying all the pots, because there is a possibility of us losing more stock in that way. And then, if possible, chain the pots together to make it difficult to steal the garden pots. So you have a chain that runs around the holes of the pots and you connect all your pots together. Someone is saying, what if they steal all the pots? You then ensure that you secure it maybe to a very strong post, maybe around the shop, so that no one can grab all the pots then. So what we're trying to say is make sure that it becomes difficult for anyone to take the pots, such as putting a chain around all the pots, like chaining all of them together to make it difficult for anyone to steal our pots. Okay, so what we're going to do now, we're going to start a new topic altogether, which is called the specific identification. We're going to start something completely different, something completely new. All right, so in order for us to do that, we're going to take a 5-minute break. We're just going to go for a 5-minute break, and then after that break, we're going to introduce you to something very, very interesting called the specific identification method. We're going to take a 5-minute break. I'll see you shortly.
I want you to ask yourself these 3 questions. Number 1, what do I want? Do I want to become an A student or do I want to become an average student? Number 2, I want you to ask yourself, how do you plan on getting there? Are you going to put more extra hours or are you going to just sleep? Number 3, who will be with you in this journey? Because it is important that we associate ourselves with students who have the same vision as us, who want to become A students, who want to put in the extra work, who want to become better at what they do. Unsuccessful people do not plan, they just let life happen to them. But successful people are planning on how they want their lives to be. And right now, you plan on how you want your results at the end of the year to be like.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
short break, we did the weighted average method. And I remember we did some calculations from the Eastern Cape as well as the Free State papers. And I hope you enjoyed those ones. But I promised you that I'm going to teach you two methods today. So far I have done the weighted average method, and today I'm going to do as well the specific identification method. So it means I'm going to do the third inventory valuation method, because in the first week I did the first in, first out. Today I did the weighted average, and then I'm now going to do the specific identification method. Okay, what is this specific identification method? You will find that this method is the simplest form of stock valuation, where every item is assigned a specific cost price. All right, so every item is assigned its specific cost price. Each item sold is specifically identified as it appeared on the purchaser's invoice. And this system is relevant when large commodities are sold and every unit has its own cost price. Very important. We're talking about items such as your vehicle, your machinery, your jewelry. You have furniture shops that even use this type of method. The specific identification is manually intensive method in managing the stock, and every item in stock will be recorded at the specific original cost price. Okay, now as I promised earlier on, we're going to do activity number 3 now, and this is from the NSC November for the year 2023, and our focus is on question number 4. Okay, I know you're going to enjoy this method because even when I introduced it as the simplest of the 3. So remember, FIFO, weighted average, and specific. So this is a simple method. You just need to follow me, and then you see how we can calculate some of the figures. Okay, I see your pen is ready and you're about to start writing. Maybe we should now show the information. Let's go and see. Clearview Electronics is owned by Sipokosa. The business sells 2 models of printers. Okay, they have the Howie and the Yama. Okay, so these are specific brands now. All right, the specific identification method is used to value their stock. Their financial year ends on the 20th of February in the year 2023. Good internal control ensured that there were no stock shortages required. Calculate the value of closing stock on the 20th of February. Use the specific identification method. And then we're going to do all of the other calculations as we go. But the first one is to calculate the value of closing stock using the specific identification method. Let's go. So we are given 2 different brands here. 2 different brands. We have the Howie and the Yama. Okay, let's see what we are required to do. Calculate the value of closing stock on 28 February. Use the specific identification method. Let's go. So the first one is to start with the Howie. Let's start with the Howie. With the Howie, you see we have opening stock here. So I'll now say with the Howie, my stock at the beginning of the year, it's 90. So I have my 90 here, opening stock. Then I'll say plus. Obviously, you know what I'm going to add. I'm going to add my what? My purchases. So I'm going to come in and add how much? 340 plus 340. So it's opening stock plus purchases. And then we are told here, we returned 5 Howies. Okay, so that means I'm going to come in and say minus 5 because 5 were returned. So remember, you always minus that. How many do we have available for sale? 90 plus 340 minus 5. That gives us 425. Of these 425 that were available for sale, how many did we end up selling? We saw 300. minus 300. Therefore, if we had 425 available for sale and we sold 300, how many do we still have on hand now? We have 125. These have not yet been sold. So if 125 has not yet been sold, I want to now know the value of this 125 units. We go back to the Howie. You can see that the opening stock had a cost price of 3.8 and it remained the same because it is specifically identified in this way. And then it is 3.8 again here. Even on the returns, it still is 3.8. That means when I come here, I know its specific cost for the Howie. How much is that? 3,800. Therefore, it means if I multiply these, I will get an amount which is 475,000. This is for the Howie. Can I go on to the next one? Okay, so we did the Howie. Now we want to do the Yama. Okay, with the Yama, do we have opening stock? No, we only have purchases. How many units did we purchase of the Yama? 495. So it's 495 here of the Yama. Did we sell any? Yes. Were there any returns? No returns there. So we only have sales of 430 minus 430. How many units do we still have on hand? We have 65. If we have 65 units on hand, what was the cost price for these units? 5,410. 5,410. Calculators, guys, calculators. How much do you get? You get 351,650. Okay, so you get 351,650. That means here now we have the value of the Howie and we have the value of the Yama. So I can get my total then. My total becomes the value of the Howie, which is 475, plus the value of the Yama, which is 351,650. If I add these two up, I get 826,650. That becomes the value of my closing stock. Yes, that is the value of our closing stock. Indeed, it is as simple as you see it. You just need to practice and you need to do different kind of questions so that you don't think if you do one, then you're sorted. Never. It's impossible. You need to do as many questions as possible so that you get exposed to different ways of being tested on this method. Okay, let's see what other questions we were required to answer. It says, calculate how long in days it would take to sell the closing stock of the Howie printers. How long in days it would take to sell the closing stock of the Howie printers. I have two methods to show you. So, how long in days? Here we're talking about what? This is your stock holding period. Okay, how long in days it will take to sell the closing stock. So in other words, we are calculating the stock holding period using the closing stock. So in other words, I can come here and I can say my closing stock, remember I calculated it. How much was it? For the Howie, 475,000. So I can come here and I say 475,000. Then I divide it now by my cost of sales. All right, how do I get my cost of sales? How many units were sold? We sold 300 units. And what was the cost per unit of the Howie? It was 3,800. So I'll simply come here and multiply by 3,800. Okay, cost of sales. How much did it cost us in order for us to sell these units? Cost of sales. Each unit was costing us 3,800 and we sold 300 units. So we should get the cost of sales in this case. And the cost of sales therefore becomes 1,140,000. So I can come here and divide this by 1,140,000. Then I multiply this. How long? In days. By 365 days. And then it should give you how much? It should give you 152. Is it 152? Yes, 152.1 days. 152.1 days. Okay, so this will be method number one. This will be method number one when I use the rand value. Method number one, when I use the rand value. Method number two now. Method number two, okay, of calculating the very same thing is when I use units now. Units. Remember how long in days it will take to sell the closing stock. So in other words, you want to know how many days it will take to sell the 300 units. Okay, so I think it should not be that very difficult. No, it is not the 300 units. It is the closing stock. How many units is our closing stock of the Howie? Remember, we did that one already, whereby we had our units on hand minus the units sold. Okay, so let's see if we can do that one again of the Howie. Of the Howie, remember we had 90, and then we purchased how many? 340. So in other words, we had 90. I'm going to repeat this again. 90 plus 340. All right. So it's the 90 plus the 340. Remember, we're focusing on the Howie. It's the 90 plus the 340. All right. And then we returned how many? We returned 5. We returned the 5. And then we sold the 300. All right. That means our closing stock number of units is 125. Okay. Remember, we did that earlier on because here we want to know how long it will take to sell the closing stock. So what we want, remember what you want, is to know how many days it will take to sell the 125. But we know that this year we have sold 300 units. And we sold those 300 units in 365 days. So we say 125 over, this is what we want, over what we have, which is the 300, over the number of days it took to sell the 300, which is 365 days. And then it will still give you 152.1 days. Different ways of saying this. You can still say closing stock over cost of sales in units, multiply by 365. Exactly the same way. Different ways of explaining it. Different ways it can be tested, but it will be the very same thing. So it's 125 over 300 multiplied by 365. That gives you 152.1 days. How long it will take to sell the closing stock. All right. And then we then come here. And then the question now is, explain whether SIPO should be concerned about the stock holding period of the Howie. Okay, so the Howie, remember how many days was it? 152.1 days. Should he be concerned about the stock holding period of the Howie and the Yama? The Yama is 55.2. Quote figures. Give possible reasons for the difference in holding periods for the two models. You can see this one, the stock holding period is 152.1, and for this one, it's 55.2 days. So, should he be concerned? So that means we're going to talk about each particular brand, each particular model, and then we speak if we should be concerned about that particular model. Let's begin with the Howie. The Howie printers are selling slow. So they're slowing at a slower rate. That is 152 days. Yet the Yama are selling at 55.2 days. Okay, so remember the relationship between your inventory and your cash. These move in opposite direction. When you sell inventory, cash is coming in, and when you sell and when inventory is coming in, cash is going out. Okay, the relationship between inventory and cash. So the longer we hold stock, the longer we keep stock in the business, the longer we keep cash out of the business. I hope I'm making sense. Because they will never be in the same place at the same time. No. One has to be outside, one has to be in the business. So if we are holding stock longer in the business, we are holding cash longer outside the business. So we then say, you will see that the Howie printers are selling very slow, yet the Hammer are selling at 55.2 days. The Howie printers are not as popular with customers, all right? And then you can see there was those 5 units that we returned. That means they may be of poor quality. So that is something that we also need to look into. And then if there are changes in technology, it will affect the selling of the printers. So if there's any change in technology which takes place within the 152 days of us holding this stock, it will make it very difficult to sell these printers, as they may be outdated, obsolete, because there'll be new technology then. Therefore, it becomes difficult to sell these Howie printers. Even though the Yama is selling faster, it is more expensive than the Howie. You can see the price is 7.3 here against what the Howie is selling for, which is 5.7. So customers demand the good quality despite the high price. Okay, so this is also something that needs to be considered, that our customers would actually prefer to go for the Yama even though its price is a bit high. Okay, so in the next activity, I'm going to continue explaining again on the aspect of holding stock and how it affects our business. We're going to go to activity 4, that is from the NSC June 2023 paper, NSC June 2023, question 2. Okay, let's begin. Remember, we are on the specific identification method, Durban branch. This branch sells the Pacific and the Caspian smart TV sets. Mandy was concerned about the following issues. Number 1, the Caspian TV would be too expensive for her customers. These are her concerns. And then number 2, high stock levels in all her products might negatively affect the business. Remember, we spoke about stock, high stock levels, and how it affects the business. Mandy expected to sell 1,000 Pacific TV sets in the 2023 financial year. She therefore adjusted the selling price of the Pacific TV in September and asked the bookkeeper to provide an analysis of the quarterly sales. Okay, what are we required to do? Calculate the value of closing stock of the Pacific. Here's the Pacific, using the specific identification method. Okay, I don't think this will take us much time. There isn't much complication here. Let's see. Do we have opening stock? Yes. How many? 350. Opening stock is 350. Do we have purchases? Yes. How many? 800. Do we have returns? I'm looking. Do you see returns, guys? I don't see anything. So that means we don't have any returns. How much do we then get? 1,150. Can I go on? These are the units available for sale. And then we then say, how many units did we sell? We sold 765 units. What does that mean? It means we have 385 units on hand. Closing stock, number of units is 385. So if we have 385 units, this is what we have, 385 units. And each one is costing 9,300. 9.3 here. What is the value then? Calculators, please. Say it again. 3,580,500. That becomes the value of our closing stock. 3,580,500. That is the value of our closing stock. This is your specific identification method. Yes, I can see you are enjoying it. I'm glad. But it should not end there. You should continue practicing. You should continue doing different question papers. Okay, I hear some of you are saying, Mr. Simbi, let's carry on. Let's do that. Let's do that. Okay. The next one, calculate the gross profit earned on the sale of the new Caspian Smart TV sets. All right. We want to calculate the gross profit. I'm going to show you two methods. Remember, in the exam, you don't do both methods. You choose one which is good for you. If it's shorter, then better, so that you can save time for other challenging questions. But I'm going to show you two methods. Then you choose which one best suits you. All right, let's start with the first one. You know, I always start with a long one, isn't it? Okay, now we know each other. I will start with a long one, then I show you the quicker one, the fast one. Let's start with the long one. What are we calculating here? Gross profit. All right, so if we want gross profit, what do we say? We are told here that the markup is 60%. Okay, so I assume you know now that cost is always 100%. Markup in this case is 60%. That means selling price is 160%. Are we good? All right. So it would then mean that this 160 is the selling price, which is equivalent to the 10,934,400. Can I go on? So what we want is the markup, the gross profit, the markup. So we're going to say what we want is 60. And what we have is 160. Are we good? We want 60. What we have is 160. Multiply that by what we have, which is the 10,934,400. How much is that going to give you? 4,100,000. This is what it gives you. 4.1 million. 4.1 million. 4.1 million. Okay. Or you can use this method now, the one I'm going to give you now. Okay, let's see with the second one that I'm going to give you. We know that the cost price, we have the cost price per unit, which is 10,200. Are you still with me? Okay, so we know that that is 100%. That is 100%. So what we want is the profit, which is 60, over the cost, which is 100. Multiply that by the 10,200. That means our profit per unit, is 6,120. This is profit per unit. Profit per unit. How many units were sold? 670 were sold. Therefore, it will give you 4,100,400. It's 4 million. Okay, there's a 400. Thank you for reminding me. Thank you so much for reminding me. Okay, there's a 400 there. Okay, so it's 4,100,400. Okay, thank you so much for reminding me. There's a 400 there. Thank you, guys. Thank you. So that's 4,100,400 again. Okay, so you have two methods here, but you only use one. You can't spend time in the exam showing two methods. One method. One, get your marks, move on to the next one. Okay, I hope there's someone here who's saying, Mr. Simbi, I can't wait for the junior exam because now I know how to do the what? The specific identification method. I know the weighted average method. And I am hoping that you're going to continue practicing because May is just a few days away. And in the month of May, we're going to be writing paper 1 as well as paper 2. Please, if you need help with the paper 1 questions, we have done lessons on this very same page. Right from the beginning of the year, in January, we did the statement of comprehensive income. We did the statement of financial position. We did the cash flow statement. You can still go back and watch these lessons and you get much assistance because you're watching them in your own space, in your own time. And then you get to understand how to calculate net profit, gross profit, and all of these adjustments. And can I tell you, if you still have problems with calculating the correct net profit, I did some of those lessons. You'll find them on this very same page again. All you need to do, go and search, and then you'll find some interesting questions. And we explained it very well. All right, so let's go on to the next question. Let's go on to the next question. And then the next question then says, comment on the quarterly sales of the Pacific TV sets. So now we need to comment on the quarterly sales of the Pacific TV sets. Okay, so this is the Pacific. And explain whether or not Mandy's adjustment of selling price was a wise decision. What did Mandy do? She adjusted her selling price, isn't it? Okay, and I think you see it much more clearer when you come here. Okay, when you come here, you see how she adjusted her selling price. I'm going to show you just now how she has adjusted her selling price. Okay, so we want to see if what she did, remember the question is saying, comment on the quarterly sales of the Pacific TV sets and explain whether or not Mandy's adjustment of the selling price was a wise decision. She adjusted her selling price, so we want to know if that was a wise decision. Okay, now some of you are now saying, okay, Mr. Simbi, let's go and answer this question. Now, it is very important that even as we answer this question, we understand that now this is an analysis question. All right, so she adjusted her selling price, that is, she has reduced her selling price. You can see here in May it is 13.5, in August it remains 13.5, in September it went to 10.3, and it further went down in December to 9,800. So now we want to see if it was a good decision to adjust this selling price. Number one, when she adjusted the selling price, the units sold dropped. Okay, the units sold dropped from 250, it was 250, and it dropped to what? 245. Okay, so you can see that it did not give as much required change. In actual, the units sold dropped. Okay, and then the gross profit per unit, the gross profit per unit also decreased. All right, so that is from 4,200 to 1,000. Okay, from 4,200 to 1,000 and eventually to 500. You are now comparing it with the cost per unit, with the cost per unit. Remember, with the Pacific, the cost price per unit was your 9,300. It was 9,300. So you are saying in the month of March to May, if you say 13.5 minus 9.3, you were getting 4,200. But the price was then changed to 10.3. So the profit now decreased to 1,000. And she dropped it again further to 9,800. That means her profit is now only 500. Okay, so that is another point that we need to consider. And the closing stock is 35 units more than the opening stock. All right, so you remember we did do those figures, and you can see here she has more closing stock than her opening stock. Her opening stock was the closing stock of the previous year. So that means in this year, we have more closing stock than the previous year. That should be a concern. So we're commenting on the quarterly sales and explaining whether the adjustment of the selling price was a wise decision. It was not a wise decision. And we have 3 points to prove that. But someone could have said it is a wise decision. But in this class, I'm only going to stick to one side, which is it was not a wise decision. And the third point was the closing stock of 35 units is more than the opening stock. Is 35 units more rather than the opening stock. Let me go on to the next one. That the sales revenue declined. The sales revenue declined from 3,375,000, which is what you see here, to 1,078,000. That's a major decline. Okay, so initially our revenue was 3,375,000, and now it is only 1,078,000. That's a major decline in our sales revenue. Okay, I'm going to move on now to the next question, which says, comment on the stock holding periods of the Pacific and the Caspian TV sets. All right, stock holding period. Remember, we calculated. All right, so here we have 184 days and here it's 71 days. Okay, so these ones were given. And the first one that I would say is the stock holding period of 184 days, which is 6 months, is long, and it is an older model that will not be able to be sold in the future. Remember the change in technology. Once we don't sell these old models, as new models are coming in, it becomes more and more difficult to sell them. And then a decrease in units sold resulted in high stock, that is 3,580,500. All right, which leads to lower profits. And then the stock holding period of 71 days, which is 2.3 months. Now we are talking about the Caspian here. You were commenting on the Caspian. It is acceptable as it is new, it is a durable product that can easily be sold, and it is well in demand. So we commented on the Pacific, which is the older one, which is taking 184 days. So it will be a challenge to sell it because newer models are coming in as your Caspian. All right. So as the new model is in, and this one, it is durable and customers are demanding this one. So we've commented, this is 184 days, this is 71 days. The lower your stock holding period, the good it is. If your stock holding period is longer, remember, that means we are holding stock for long. That affects the business's cash flow. With the Pacific, our cash is tied up in stock. But with the Caspian, we're able to buy and sell and collect and pay our creditors, buy and sell. So it allows for the movement of cash. But with the Pacific, it will lead to cash problems indeed. Okay. Explain how the different holding periods affect the business financially. All right. Number one, the Pacific places the business under cash strain. It contributes to cash flow problems. Remember what I just said. How is that so? Remember what I said. If stock stays longer here, cash is staying longer outside the business because these two move in opposite direction. So the Pacific is definitely going to create strain on the business, that is cash-wise, because our cash is tied up in stock. It's going to lead to cash flow problems. High closing stock, that is of the Pacific. Remember, we have dealt with this one already. And a slower rate of sale, that is from 250 to 110, means that money is tied up in stock, requires more liquid assets. What we're saying here is our cash is tied up in stock. So the business will now require more liquid assets. And it will incur additional expenses due to insurance because we're keeping more stock in place which is not being sold. And it will also cost us in terms of storage cost. And there is a possibility that our stock will go obsolete, that it goes out of fashion, out of style, outdated. And once it stays long in one place, it will definitely get damaged. Okay. I'm moving on to the next one. But with the Caspian brand, it is selling well, all right? That is between 340 and 330. That is in 2 quarters. So we're selling well. These are good numbers of our sales, all right? And then the sales revenue is quite high, all right? Which is your 5,548,800 or 10,934,400. Okay, that is when we have added it. All right, so here we're experiencing better gross profit, that is with the Caspian. It minimizes the pressure on liquidity because we're able to buy and sell stock and our stock is moving. So we'll be able to recoup the investment in stock in the near future. That is, the money that is tied up in stock, we're able to get it back in the very near future. So that becomes a very, very good thing for us as a business. All right. And then the next question is, explain what these periods indicate about the preferences of the customers quote figures or calculations. All right. So customers are not very much interested in the Pacific. This is an old TV. All right. But if you come to the Caspian, which is totally different now. Okay. So customers might be negatively affected. The Pacific might be negatively affected by the introduction of the new brand. The coming in of the Caspian might have affected the sale of the Pacific, and they prefer newer and more expensive Caspian TV. Okay, so here we're talking about the customer's preferences. All right, and then the gradual lowering of the selling price from 13.5 to 9.8 on the Pacific did not influence the customers. So customers still did not buy this TV, even though the selling price was reduced. So remember, here we're commenting on customers' preferences. The customers are prepared to pay more for the Caspian, all right? That is 16,320 against what they are selling the Pacific for. That is for better quality or better features that is coming in the latest technology. So customers would prefer your Caspian TV. We have come to the end of today's class, and I want to thank you for joining me again in this class. Next week, I'll be dealing with something completely different. I believe we've covered our inventory valuation methods. So in next week, I'm going to be dealing with a very interesting topic. If you struggle with tangible fixed assets, next week is a lesson that you must not miss, because I'll be dealing with depreciation. The residual value of 100, what is that animal? How do we calculate depreciation? Using the diminishing balance method, the cost price method. How do we do that? In next week's class, I'm going to be doing depreciation calculations. I'm going to be focusing on fixed tangible assets. Make sure you make a date with me. On Friday, 2 p.m., I'll be here waiting for you in my class. And I hope you invite others so that we can all benefit. Until next time, it is goodbye.